So trade tensions are escalating. What do you do?
Well, it is always difficult to model Donald Trump as an investor. And so I think we can go back and look at what are the fundamentals telling us, whether you think about the economy or earnings, valuation or money flow, some of the frameworks that I like to use. And if we think about the earnings, we're now roughly 80% of the way through the first quarter reporting season. And earnings have actually come in a little bit better than one had expected. But it was a pretty low quality beat. That is to say that earnings, which were expected a month ago when I was last year, we talked ahead of the earnings season, market was expecting about down negative 2% year-over-year growth in earnings. It's coming in closer to positive 2%. But a lot of that came from lower taxes. Lower taxes than what portfolio managers were expecting. Originally expecting around 21%. Tax rates came in around 19%. So that's sort of the first observation. But broadly speaking, earnings themselves were reasonably positive, and but again, from a low quality perspective. So what are we thinking about? We're thinking about some of the drivers of profit growth going forward, and we're looking at some of the communication services stocks. We're thinking about a combination of low labor cost sensitivity as a way of being inoculating oneself as a portfolio manager against rising labor inflation, which is one of the consequences, if you will, positive consequence from a social point of view, that you have unemployment rates so low. You saw that number on Friday, but you are leading to wage inflation, which will pressure margins going forward. That's one strategy. The second would be dividend growth, which remains a kind of a long-term strategy, which is generally paid dividends, no pun intended, for portfolio managers. That's I think how I would tackle the market right now.
You've long been calling for sort of a lull in the middle of the year, which is is playing out. It's still early. Is this how you thought it would happen, though, through trade?
No, not necessarily. As I said, difficult to model some of the geopolitical developments. They happen when they do take place. But
does it accelerate your call?
Well, no, I think the issue is it's uncertain. Certainly, it's a spanner in the works, as they say. So it's a concern. Expectation, I think, on the part is that eventually there'll be a trade deal. So if we look at, as a portfolio manager, focus on more domestic-facing companies that have more revenues that are sourced domestically, maybe more services-oriented in particular, as opposed to from the good side of the economy. If you look at a company like AT&T, right, getting 6.7% dividend yield, and we look at it as a strategy, there's a company with dividend yield and growth. You look at a company also relatively low labor costs compared with a lot of other companies. We look at companies, some of the big cap technology companies, Facebook, Google, which also have relatively low labor costs as a share of their sales. That's idiosyncratically what I would focus on. We focus on with portfolio managers.
Interesting strategy. Just to come back to trade right now, I know it's hard to model President Trump, and you want to focus on the fundamentals, but there are fundamentals at play here. So the tariff rates are set to go up from 10% to 25% on the $200 billion. That includes semiconductors, agricultural products, machinery. Do you just have to stay away from those stocks that get impacted by tariff costs right now?
Well, I think you can think about it and segment between services companies and goods-oriented companies. Some are more exposed and more sensitive to the impact of tariffs. Some are more sensitive to potential retaliation on the part of China, which may take place. So, yes, those are companies that would be in industries that are more exposed, risk both sides of that tariff equation, and those that are more inoculated or more immune from those risks. There are always risks, but those are some of the strategies, which would be more in the services area. If you want to think about whether that's communications, you can look at that in any different industry group that's more domestically facing, is what I would certainly emphasize.